Let's be honest, if you don't have money and you're trying to day trade, it's not gonna be worth your time. Like, seriously? You put in $100 and it turned into $102.84? Come on, man. We got bills to pay. But fortunately, for many people, there's a way to trade using other people's money, and that's through a funded account. Big prop firms will give you access to trading accounts with a lot of money, and I'm talking upwards of $250,000, and they let you trade with it and keep a good amount of their profits. But they don't just give you this money to anybody. You have to first pass a challenge. So for today, we're gonna go over what those challenges are and then everything you need to know to be able to pass the challenge so you can have access to hundreds of thousands of dollars to trade with. Chapter number 1, understanding funded account challenges. So what exactly are funded account challenges? These are essentially evaluations designed by proprietary trading firms to identify traders who can handle their capital responsibly. If you don't have enough capital to trade with your own money, what do? You borrow institutional funds. You borrow from the big players who have serious money in this business. How? By showing them you know how to trade, by passing the evaluations or trading challenge. Phase 1, the evaluations. This is where you prove that you can trade. All you do is to pay a small fee to sign up for the evaluations, and if you pass it, they give you the money to trade with. The fee typically scales with the account size. Let's say for a $25,000 account, it might cost you $25. A $50,000 account would be $50. A $100,000 account would be $100, and a $250,000 account would cost you $250. So if you pass the evaluations account, let's say for a $250,000 account, you get access to $250,000 to trade with. That's insane leverage for such a small investment. Say for a typical $100,000 trading account challenge, you might need to make 6% profit without losing more than 3% of the account value. So you would need to take that $100,000 to $106,000 without ever dropping below $97,000. And this is all based on a simulated account during the challenge phase. Once you pass the challenge, you get to phase 2, which is the paid or funded account, aka the sim payout phase. This is where most people get confused. Yes, you're now in a funded phase, but you're still trading on a simulated account, not yet trading the firm's real capital yet. Here's the kicker though. The prop firm is now paying you out of their pocket based on your simulated results. They're testing whether you can be stable and consistent before giving you real capital to trade with. So no, they're not going to let you sit here forever collecting payouts risk-free. At some point, they want to see you go live and trade with their money. Phase number 3, the live account, real capital. This is where you're now managing real funded on behalf of the firm. They give you access to real money. The catch? The risk is shared, so as the profit. Now, typically the first $10,000 is yours to keep, and anything above that, they take 10% of your profits. Think about how big institutions make money. They either use their capital to flow through the market and take the retailer trading's money, big sharks eating the small fish, or they use their money to invest in the top 2 to 5% and use these traders' talent to make money for them. By passing a trading challenge, you're proving you're in that top 2 to 5% of traders. They're invested in the best, and that's how they create a money-making engine. Chapter number 2, key requirements and rules. Now let's dig deeper into the specific requirements you need to meet. Let's say for a $100,000 account challenge, you typically need to make 6% profit, so $6,000, without ever losing more than 3%, which is $3,000 from your starting balance. This is called your maximum drawdown limit. Most firms also have daily drawdown limits, meaning you can't lose more than a certain percentage in a single trading day. often around 1 to 2%. There are usually minimum trading day requirements, meaning you might need to trade on at least 5 to 10 different days before you can complete the trading challenge. This prevents from someone getting lucky with one big trade. Position holding rules are also very common here. Some firms don't allow holding your positions overnight or over the weekends due to gap risks. The subscription model is another aspect to be aware of. If you fail the challenge, you'll need to pay again to retry it. This is actually how many of these firms are actually making their money. From traders who keep trying but never pass. They taking advantage of traders with little capital who keep paying those $25, $50 to $100 fees over and over. So, before you start, make sure you thoroughly understand all of the rules. Don't be one of those traders who pays for 20 or 30 of these evaluations and end up losing $500 or more without ever getting funded. Chapter 3. Developing a winning trading strategy. Let's talk about how to actually pass these challenges. This is where the rubber meets the road. Let me show you how exactly what I look for when trading these challenges. I'll put a chart here to demonstrate. What I'm showing you here is a Renko charts. Renko charts are purely price movement. They're not based on a time, 1 minute, 5 minute or so. They filter out a lot of these noises you see in a regular candlestick pattern charts, making the trend much easier. Say from the bottom here, I see a high, a low, I see a high, a low. This is an uptrend. Looking left here, I see a low, a high, I see a low, a low. This is a downtrend. You see how much clearer this Renko chart is showing me? And notice, I have a 9 grid charts here. Say if I'm trading on a 1 minute chart of the SP 500 index, I'm just not looking at this market in isolations. I'm looking at the mini Dow Jones, YM. I'm looking at the mini NASDAQ, NQ. I'm even looking at the Russell 2000, RTY. Now, why is that? Because I want to see the market confluence. If all 4 of these markets are moving up together, as you can see from the period of 715, 720 to 730, look, ES is going up, YM is going up, NQ is going up, and RTY is going up at the same time. This is a very strong buy signal. Vice versa. If they're all moving down, that is a strong sell signal. Say if they're diverging, one market is going up and the other market is coming down, then they're not talking in the same language. This is a warning sign. Look at the VIX chart here. This is a fear and greed index. When people are fearful or they're panicking, this VIX is going to spike up. Look at the exact same period at 715, 730 or so. People were greedy. What do you see in the VIX? It's coming down. So when the VIX comes down and the market goes up, this is the confluence that I look for every single time. So how would I go and enter the market at the bottom? I wait for a pattern here. This is a W formation, so I call it, a double bottom, or I call this a second dip pattern. After we get a high, moving into this sort of high, low, I take a trade here. I put my entry there, put my stop loss at the previous high or low or at the bottom of the charts, and I'll trade it all the way to the first resistance there, second resistance there, and third resistance there. Typically, I'll go and buy here, stop loss there, target here, and target there. This is where I would take this setup in my sleeve. This is where I protect my risk, and this is where I look for a massive return on my trades. For funded challenges, I'm looking for these high probability setups all the time. Clear stop loss, clear profit. I'm not going to try to catch every single move on the market, just one with the best risk and rewards ratio, everybody. The exit for profit strategy is crucial here. Many traders make 5% profit, then let it turn into a 2% loss because they get greedy and don't take profit. Or they make a winning trade, but let it stop out and turning into a loss. Now, the concept is very simple. When you make that profit, you need to protect it. If you enter at $100 and it goes up to $105, your stop loss should move up to $101 or $102. You have to guarantee yourself profits no matter what. Most people want to make $10 when they're up 5, so they don't secure the $5. But in funded trading challenges, $1 of profit is better than any loss. As long as you make profits, you remain in the game. The moment you start losing, they can take that account that you have completely away. Risk management is absolutely critical here. My rule for exit for profit is 2%, which guarantees you have 98% of your money to trade with at any given time. So if you put $100 into a trade, you should get out no later than when it hits $98. This trade is not going into the right directions you plan, so you need to exit. Chapter number 4. Psychological aspect of trading challenges. The psychological side of these challenges is where most traders fail. Many traders don't take funded accounts seriously enough. They see us as just a simulations, or they think if I fail, I'll just pay another $25 and try it again. But before you know it, they're in 20 different evaluations and have lost over $500 or more. That's not small money anymore. The major pitfall is that people don't treat these challenges like real money. They become reckless because they think the risk is minimal, but the institutions are counting on this mentality. It's how they make money from traders who have very little to begin with. When you enter a funded trading account challenge, you need to ask yourself, do I have the discipline? Do I have the mindset required to be a trader to begin with? If you don't, the market will eat you up, or these challenges will eat up every bit of money you have. About 90 to 95% of traders who enter these challenges don't pass the evaluations. That's subscription money going straight to perms. If you have a lot of money and trade with your own capital but don't succeed, they take your money through the market. If you have very little money and go through the funded trading accounts, this is how they take it instead. To stay disciplined, you need to have a clear trading plan before you start. Document your entry criteria, stop loss levels, take profit targets, and maximum risk per trade. Then stick to this plan religiously, regardless of what the emotions are telling you. Chapter number 5. Tools and resources for success. Having the right tools can significantly improve your chances of success. Here are the specific tools I recommend. Market confluence tools are essential. As I show you in the charts example, you need to look at multiple markets simultaneously to confirm the trend. Don't just zone in on that 1-minute chart trying to make trades. Look at 2, 3 other markets to see what they're doing. If you're trading the E-mini SP 500, which represent 500 companies in the index, you want to see what the Dow Jones is doing. You want to see what the Nasdaq is doing. And you want to see what the Russell 2000 is doing. If they're all heading up at the same time, you have the confluence to be a buyer. Think of it like walking into a family with 5 siblings. If all 5 are happy, you can say the parents are doing a good job. But if one child is upset, while others are happy, something is off here. I look for these outliers or noise in the market. When I see a lack of confluence, I stay out of the trade. Renko charts are another powerful tool. They're not based on time frames like the 1-minute or the 5-minute charts. They're based purely on price movement, which eliminates a lot of the noises you see on traditional charts. The 9-grid display I showed you earlier lets you monitor multiple markets and multiple timeframes simultaneously. This gives you a comprehensive view of the market conditions and helps you identify high probability setups. The VIX, the Fear and Greed Index, it's also crucial. When people are fearful or panicking, the VIX goes up. When they're greedy or complacent, it goes down. Understanding this relationship alone helps you anticipate market movement. If you're trying to pass these trading evaluations on your own, the problem is you don't have the technicals or the mindset or the risk management framework to consistently be successful And that's where communities like Exit for Profit can help, providing the technical tools, trading psychology support, and risk management strategies that you need. Chapter 6. Real-life success stories. Although this may feel like fake money, the results are 100% real. Take Nick, a 19-year-old who decided to invest his graduation money in learning how to trade instead of going to college. Within 6 months, he took the first semester of college, but then took the second semester off. He made $8,000 in a day and followed that by a $20,000 within the week. Within about 8 trading days, he made $28,000 combined. Now, he's quitting college to become a full-time day trader at 19 years old with no prior trading experience. Or consider Lily, a Chinese pharmacist who got scammed into a crypto scheme where she transferred a wire into a vault that didn't exist and never saw that money again. After this devastating loss, she became funded through our trading program. She didn't just get one funded account, she got multiple trading accounts. By the time we knew it, she had $1.2 million worth of trading capital across 12 different $100,000 funded accounts. She makes one trade in one account, right? But then she duplicates it across 12 different accounts using trade mirroring. In this way, she's been able to earn back all the money she lost in the crypto scam. And then there's Johnny Lamb, another pharmacist who traded so successfully that his broker actually denied him a payout because they couldn't believe he was making so much money legitimately. He would request a $40,000 payout at a time, and the broker would ask for a video proof that he's actually doing it himself, something most traders don't record. Unfortunately, he has around $60,000 to $70,000 in back pay that they never paid him. This highlights another potential downside of funded trading accounts. If you make too much money too quickly, some brokers might make it difficult for you to withdraw your profits. They might create obstacles or request unusual verifications. This typically happens with a very large withdrawal, like $40,000 all at once. The smaller regular withdrawals are usually processed without any issues. Chapter number 7. The common mistakes and how to avoid them. Let's talk about the common mistakes that cause traders to fail these challenges. The biggest mistake is not knowing the rules and getting blown out in one day. Many traders just don't know how much profit they need to make or how much they can lose before failing. They might make $5,000 where they only need $1,000 to pass, but then they try to make more and more and end up losing it all. For example, if you're already in the trade and you're up $5,000, but you only need $1,000 to pass a trading challenge, don't get greedy. If that $5,000 dropped to $4,000, you're still well above your target. But if you push for more and it dropped below your required profit level, you're now jeopardizing your entire trading challenge. Another common mistake is over trading out of impatience. Many traders feel like they need to hit their profit target so quickly so that they take so many trades or force the setups that aren't really there. Revenge trading after losses is also deadly. If you lose on a trade, accept it and move on. Don't immediately jump into another trade trying to win it back, the money that you lost. To avoid these pitfalls, treat the trading challenge as a business, not a game. Read all the rules carefully before you start and have a clear trading plan and stick to it. Most importantly, practice proper risk management on every single trade. Chapter 8. Preparing for the next steps after passing. Once you pass your trading challenge, congratulations! You have accomplished something that only around 2 to 5% of traders achieve. But now, the real work begins. The transition from evaluations to live trading requires a shift in your mindset. During the trading challenge, you might have been trading with just 1 or 2 contracts. Now, with $100,000 funding account, you could trade 6 to even 8 contracts or more. Most traders go all in with these big contracts where they were using only very little before because they were want to make real money and get paid quick. This is exactly the wrong approach. If you were trading with 2 contracts before, you should start with 1 now that you have a live account. Then gradually increase to 2 and then 3, and as your account balance grow. The key is steady, consistent growth rather than trying to hit home runs. With a $25,000 account, you can expect to make around $200 to $300 a day. With a $50,000 trading account, that increased to $400 to $500 per day. And with a $100,000 funded trading account, you can realistically make $1,000 or more per day. To turn this into a long-term career, you need to show up and be committed to the process every single day, regardless of the outcome. Be there every day to witness the market move. If you're trading for an hour a day, pick that hour and stick to it. Be so disciplined. Write everything down, study, and continuously improve. The average student in a program takes about 8 months to become consistently profitable. That's a journey from am I ever going to get this to almost quitting to finally understand and being able to do it consistently. Once you do figure it out, you typically only need to spend an hour a day actually trading. Yesterday, for example, we got in, made our money in 18 minutes and left. Sometimes it takes longer, but on average, I don't stay at the chart for more than an hour a day. Chapter 9. Conclusion and final thoughts. To wrap things up, funded trading accounts represent an incredible opportunity for skilled traders who lack capital. They allow you to leverage your skills without massive risk, trading with your own money. Give it a try. Try it out. Say if you fail, see how it works, then develop a strategy to beat it. This applies to everything in life: video games, college, educations, anything. The rewards on the other side are incredible. You're risking $100 to potentially get access to $100,000 in a week or 2. Now, if you can beat the trading challenge, you continue to make money. The first $10,000 you make, it's 100% yours to keep. And anything above that is typically a 90-10 split, with you taking 90% of the profit. Nobody gives you this kind of risk-rewards ratio in life. It's like gambling, but smart. Even in the casino, if you take $100 and make $200 to $300, that's considered good. But here, you take real money. And if you want more hands-on help to get you funded, click the link on the description to join the Exit for Profit family. See you there.